Hey folks, Dan Frio here, the rate update. Today is September 24th, 2020. Where's time going? Well, we had great news at the end of the day, and we saw a market rally in the MBS market, the ones you and I care about, and I'm going to show you that here in a second. The stock market, but there's some good news on the Fed level that's helping everything, so that's what we're going to get to next. So, don't go away. We'll be right back. Okay, I've been saying that I don't really see anything happening to rates basically from here to the election unless something really weird comes about, and we're kind of hearing glimpses of that right now. The stimulus plan that they were kind of working on or trying to get through, I didn't have a ton of optimism on it. I knew some things would get done, but now they're talking another $2 trillion or something of stimulus going out there. And some of the markets like it. The bond market really likes it because they're saying, the Fed's going to step in and help out even more. So we saw rates at the end of the day, or I'll put it this way, we saw the MBSs at the end of the day kind of rally. I just went in to update all my rates for today for this video. Nothing's changed yet. So I see tomorrow we might probably see a little bit of a decline in rates. But the thing lingering with everything is on October 1st, if lenders have not implemented that FHFA fee yet, most lenders are going to start implementing that on October 1st. What am I talking about, the FHFA fee? Well, I was just quoted on MSN, Yahoo Finance, and in MoneyWise yesterday, because they actually reached out to me and said, Dan, we have a couple scenarios for you. What are you doing? What are you advising your clients about locking? What do you talk? When you talk about no closing costs and so forth. So I had to answer a whole ton of questions, and then they posted a bunch of those on a couple different websites. Again, MSN, Yahoo Finance, and I'm going to post that. I forgot to do it yesterday, but I'm going to post those down below. Yours truly was on all those, so I'm not just, hopefully I'm not just an average mortgage loan officer. I can be your consultant, and I have a lot of people that reach out to me on a daily basis just looking for help. And today I have a great story. Had a young lady, I think she was in Texas, I won't say her name, and she reached out to me and she said, Dan, I got this quote. Can you please look it over? And this stuff is so confusing to me. So I went through it and I'm like, you got to be kidding me. So here's how the conversation went, or the email went. So I'm not going to send any names. So if you're out there and you send it to me, thanks, and I'll take care of you, I promise. But she said, well, my loan officer said, and they emailed me saying, if you can get a better quote out there, let us know and we'll help you out. I hate that. It's like me going to buy a used car and they're like, that car will sell it to you for $40,000 unless you can find it out there cheaper, and then come back to us and maybe we'll negotiate. That's a pretty shitty way to operate. Excuse my French. So I got her quote, and it was a rate of 2.875. I'll give you the numbers because the person is, I'm going to keep him incognito. But I go to page 2, and I always tell you guys, we got to go over the fees. And here is a perfect example. I go to page 2. If you go to the second column, or the left column, there's section A, B, and C. A is all the lender's fees, okay? B is all of the other fees, such as appraisal and credit reports. Those are normally pretty standard. If you need an appraisal, all the appraisals will be about $500, give or take $20-$30. Credit reports fees, $20-$30. It's all basically the same. So B is usually pretty close. C is your title fees, your title insurance. And I'll go over another video explaining to you what title insurance is. To get a mortgage, you have to get in title insurance. So you're kind of at the mercy there. So the biggest thing we want to focus on is section A. Section A, they were charging her over $8,000 in fees. I quoted her the same rate that she's getting with zero fees. She's saving $8,000 by just finding me on YouTube. So that's why I need you guys. Please, if you know any family, friends, relatives, whatever, get a second opinion. Maybe what you got already is, I can't beat it. But what's it hurt to get a second opinion? I'm not pulling your credit. I'm not doing anything. Basically, you're sending me what's called your loan estimate or your fee sheet from another lender, and I'm going to write through it in red and tell you exactly what I can do. Keep it. Etch it in stone. Because if you apply, if I come back and say, yes, here's what I can do, and you apply right then and there and we lock you in, you're going to get what I quoted you, as long as what you gave me was accurate. Your credit scores, the home value, how much you owe, how much you make, those items, as long as those are there, you're golden. So that's why it's not bad to have a second opinion. And please, reach out to me, and at the end of the video, I'll give you all my information on how to get a hold of me. But let's go on to it today. What happened in the market? Let me put my cheaters on. So I'm going to read some of the data that I just researched on your behalf. You don't have to do any of this. I spend hours and hours and hours doing this every day, and I subscribe to multiple systems and pay thousands of dollars. I truly do, just to help you guys out. So when you reach out to me, I'm honest with you. If the quote you got beats me, I'll be the first one to say, you know what, God bless you, take it. Just sign, seal, deliver, move on, don't look back, and just be done with it. In most cases, I'm beating the rates, okay? So but here's what happened today with rates. I'm gonna show you the MBSs in a second, and they're up pretty good, and they're still rallying a little bit. It's too late in the day for us to make any changes on rates. So tomorrow we'll probably see a little bit of ease, but you never know what's gonna happen overnight. New home sales came out today. They were up 4.8%, but they were up 43% year over year. From last year to now, home sales are up 43%. And to top it off, inventory is at 282,000 homes are on the market. There hasn't been that limited of a quantity in homes since 1963. So people they have this clickbait out there. The housing crash is going to, what's going to go on with the housing crash? And it kind of drives me nuts because it's clickbait when you look down below and they get like 100,000 views. And then you click into it and it's basically mumbo jumbo. For most people don't even have a clue what they're talking about. I do this every day. I've done this every day for 33 years. And I keep in tune with the markets so I can advise you. I'm not scare tactics. I just give you the facts. Hopefully you use me. So they said, where were we? On the number of units we're low. It's going to keep values up. Okay, so I don't see a big crash in that market. The government came out today and they're proposing another $2 trillion stimulus plan. That helped ease the markets. So that helped ease the bond market at the end of the day, and I think we saw the stock market come off a low and go up a little bit. So that's good news. On the employment or unemployment numbers, there's 870,000 people more. That's bad English. 870,000 more people filed unemployment. And that doesn't include the pandemic unemployment claims that are right now at 26 million. Well, the good news on there is that's down 2 million from where it was last week. So that's good news. But overall, we got over 38 million people unemployed. It's a bad number, guys. So that's what's prompting the Fed, or not the Fed, the government, the federal government to step in and say, I think we're going to need to do something. Plus, it's an election year, so everybody's trying to look good for their constituents and look what we did. We helped you out. Come next year after they get elected, they won't even remember you. And then they'll start raising taxes and doing all this other stuff. But right now, they're going to make everybody happy because they want you to go click and click their vote. So that's what's going on in the markets. So now let's get on to where things are. All right. I follow this every day on your behalf. Why I follow this? I follow it on my behalf. This is what's going on with mortgage-backed securities. Mortgage-backed securities is the instrument. It actually is a bond that trades on Wall Street that is the biggest determinant of mortgage rates. Okay? This is the price of the bond. So you might say, Dan, that's up. So doesn't that mean rates went up? No, guys. Green is good. Green means the price of the bond went up and the yield or the rate of return went down. So it means your mortgage rates went down. So that is good. So what you're seeing here is we're basically right in the trend of where I thought we would be. This is a pretty big uptick today. I didn't see this, but we'll probably stagnate a little bit tomorrow because I think there's a little bit of euphoria right now in the market because the Fed or the government's coming in saying that, we're in really good talks right now for this stimulus plan. But if you watch the trends, is back in here, I said, we're basically going to see the Fed has stepped in and they're going to do everything and anything they need to do to stabilize the market. They're doing a great job with that right now. They're stepping in, and so here's what affects prices, and it doesn't matter what you buy. Supply, demand. The more supply there is and equal demand means prices are going to go down because there's too much of it. If there's limited supply and big demand, prices have to rise to get to equilibrium. So the Fed has stepped in saying we're going to do everything we need to do to keep this stable. And look at it, guys. For over a month, we've really had no blips. Nothing. So if you're out there, you're one of my clients right now, and you say, oh, Dan, today the MBSs are up 13. I want a better rate. Guys, I locked you in up here. Most people I locked in through here. It's higher than here. Well, higher again is the price, means lower the yield, lower the rate. So if you watch me and you see, I say, hey, rates are down today. Well, they were down from yesterday. They were down from maybe 2 days ago. They're up from here. They're up from here. They're up from here. So I watch this for you. Again, once we lock you, you're locked. I can't go back and renegotiate because if rates went up, you wouldn't want me to call you back and say, yeah, I know I had you locked in at 2.5, but now it's going to be 3. So I'm just trying to educate you. I'm not trying to be rude. So that's what's going on right now. We have stability in the market, which is fantastic. That's the morning update. The calendar. You're going to see jobless claims came in. They were a little worse than thought. The 7-year Treasury auction went off today. It was really good. Tomorrow we're going to see durable goods orders and durable good orders ex transportation. I don't see anything there that should blip the markets. The mortgage news, I'll post this here shortly. MBS has outperformed. Bonds stayed defiantly sideways overall. Basically, again, the Fed is stepping in and buying mortgage-backed securities to keep mortgage rates low, to keep homeowners in a good position, to lower hopefully, there's 20 million people still out there that need to refinance. If you had all 20 million people refinance and they all save $200 a month, you know how much money that would free up in the economy to start kicking things in? So that's their hope right there. You can see new home sales crushed forecasts. Home sales are killing it. In the range of about 250, 300, that right now they can't build them, or they go on the market and they're gone tomorrow. Right here is the indexes that I'll show you on a daily basis what's going on. When this was posted midday, we had the MBSs were actually down, so rates were up 1 basis point. So really nothing. Okay, so this is saying, and again, these numbers right here, these are the average numbers. There's always going to be rates that are higher and rates that are lower than this. This is just an average. So you have 30-year conforming rates at 295. I'm going to go over mine in a second. 30-year jumbos, I don't have that on there, and I apologize. I'll start putting jumbos up there. 30-year jumbos at 3.13. Yeah, I don't see that. I'm going to have to look into where they're getting their numbers here because that is crazy, but whatever, I'll post numbers tomorrow. FHA is 3.07 on a 30-year. 30-year VA is 2.64. And that's 1 basis point down. Again, these are what the national averages are. So now let's get to where we are with my rates. And I'm going to blow this up so you can see it. My rates haven't changed, but they might ease. They'll probably ease a little bit tomorrow as long as the overnight numbers don't change at all. So right now, we are at September 24th, 2020. You can actually get a conventional loan. That's just a standard loan. There's just a customary standard conventional loan that we call it. Then there's government guaranteed or government backed loans, and those are FHA, VA, and USDA. I'll start posting. Let me know in the comment section if you want me to start posting jumbos and USDA. Be more than happy to do that. But if you're buying a house and you're a first-time home buyer, even if you're a second-time home buyer, and you only want to put down 3%, you can qualify for that. And the rate is 2.875 with an APR of 2.952. if you're looking to refinance and just do what we call a rate and term. So you don't want any more money back. You just want to just refinance your current balance and get a better rate. You can do that right now at 3% with an APR of 3.07. The same thing if you want to pull out some money to pay off bills. You might have credit card bills. Over the summer you took vacations. You probably didn't, but you might have. Or you might have used credit cards because you missed, you got furloughed or took a little pay cut or whatever. You might have had to resort on credit cards to help you out for a time. You can pay off those bills up to 75% of your home's value, and the rate on that is also 3% with an APR of 3.07%. So that's that. My FHA rates today, right now, if you're buying a home, you only need 3.5% down. Rate's 2.75 with an APR of 3.18. And if you're looking to refinance your FHA loan, so if you took out a loan a year or two ago and you're like, Dan, my rate at that point was 4, 3.5, whatever. Right now we can do those at 2.75 with an APR of 3.18. So that's that. And the rates are the same for VAs. You can buy a house with a VA loan, no money down, zero, nothing, at 2.75%, APR of 3.18. Or you can do a VA refinance. It's called an IRRRL. It's really simple to do. All we do is take your current balance, add in any closing costs that there might be, and redo that loan. We don't need an appraisal. We don't even need to verify your income. And you can redo that at a rate today at 2.75 with an APR of 3.18. The assumption on this is the loan, all the loans that are captured in here are $250,000. You have a 740 credit score or higher, a 43% debt ratio or lower, and that's where we are. I'm sorry, 45% debt ratio. And I explained debt ratio yesterday. I won't go into it any deeper today because I want to get you on and off of here. So if you like what you see, here's all I ask everybody to do. Please go to my website. I'm going to show you that here in 1 second. My name is Dan Frio, and I've been a mortgage advisor for 33 years now. And I created my channel because I want to help. I just want to get out the facts. I'm not here for clickbait. I'm not here to tell you bait and switch or whatever. What I tell you I'll do, I'll back it up. I promise you. Hopefully you like what you see. If you would, please give me a thumbs up. That's all I ask. Hit down below, subscribe, click the bell so if there's a video topic that you like, you'll watch it. But the best way to get a hold of me is right here. Let me go into that in 1 second. The best way to get me is just call us. I have 12 loan advisors on standby. And just to let you know, to give you a comfort level, all the files go through me. I'm okaying the rate, the fees, the program, everything that has to do with your file gets run past me. So if you'd like to work with us, give us a call at 844-775-LOAN. That's 844-775-5626. Follow us on social media. I'd love to share some things with you. You can even follow me. You can check out my personal life in here if you like. That's fine with me. Everything I have is there. But again, my name is Dan Frio. If you'd like to reach me personally, the best way to do that is email me. So my email address is pretty simple. It's D for Dan, Frio, which is F-R-I-O. So dfrio@preferredrate.com. That's it for now. So love to hear from you. Take care. God bless. Have a great night. See you tomorrow. Same time, same place. Take care. Bye-bye.